You're welcome. So market analysis. So how many type of market analysis do we have? Three. We have three type of market analysis. We have technical, we have fundamental, and the last one, thank you. So far, we have dwelt so much on technical. That's what we've been doing so far. And we said market analysis is the process of evaluating and interpreting market data to make informed trading decisions. When we started the training, Terry asked which of the analysis is the best. My response was 3 of them. But your person, the kind of person you are, your background, your exposure, the way you are wired, will now determine the type of analysis you will major on. But the truth is that you need to consider all the three analyses. You need to consider technical analysis, confluence with fundamental, then check the overall sentiment. So we said technical analysis focus on the historical events of the market or of the economy you are trying to trade their currencies. We say, okay, technical analysis is a method of analyzing financial markets, including stocks, commodities, and forex, by studying historical price volume data. That's what technical analysis focus on, and we've been able to explore that. So today, we are putting together all what we've learned about technical analysis. And we said when it comes to trading process, it's just 5 steps. So after considering the 5, you will now, and those 5 focuses on the technical analysis. Then you will now use fundamental. You factor in fundamental before you make your trading decisions, which will lead us to market execution. So one class, please. So it's based on the premise that historical price movements can provide insights into the future price movement. That's what technical analysis is all about. So technical analysis is a method of analyzing financial markets by studying historical price and volume data. It is based on the premise that historical price movements can provide insights into the future price movements. And we said technical analysts use various tools such as charts. We explore charts, right? I'm sure we have grand understanding of chart reading now, indicators and patterns to identify trends, support and resistance levels, and potential trading opportunity. So this week we are dwelling on charts to make decisions, which is a market execution. That's what we want to do this week. So now let's quickly do a quick recap on technical analysis. that will now lead us to market execution. But before then, before market execution, so if you are an intraday trader, you need to factor in, well, regardless of your strategy, either as an intraday, as a scalper, swing or positioning, you also need to consider what is it called, fundamental in your decisions making. So the best thing to do is to consider all the three analyses to make informed decisions in the market. So I want us to explore this again. So number one process is what? Identify. Let me maximize the space. Technical analysis. Process. So one, identify the overall trends. So how many type of trends do we have in the market? So I don't want us to start from candlestick chart formation, no. So we have done this, we've explored. I just want us to bring it to just like summary for us to make informed decision. So how do you identify the overall trend? You go to what? Monthly time frame, right? You zoom out. So trend can only, we have only two types of trends, which are bullish, right, and bearish. So what makes a bullish trend? A bullish trend, appreciate, great. But how do we identify a bullish trend on the chart? Great, thank you. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So how do we know if the trend has been exhausted? Okay, before we do that, so you identify a bullish trend by identifying higher highs and higher lows. We said these are our highs, our low, highs, low, highs, low, high, low, high. So this one is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. So another way to identify a trend, a bullish trend, is using your trend line to connect your lows, right? This is first low, second low. So you connect the two together. When you connect the two together, it will now support the trend. Are we getting it? So now, how do we know if the trend has been exhausted? If a bullish trend has been exhausted, how will you know? What will be the sign? Okay, market will know. I know you, I'm sure we know it, but just to interpret it is what we are. So the only way to know is, oh, when market now do higher low, right, we expect a fresh higher high. But if market begins to do higher high, what happens? It means that the trend has been exhausted. So far market cannot break above the previous high. And instead, what you now notice is that market started doing this. Great. It's now turned to lower low, lower high, lower low, lower high, like that. So it means that the trend has changed. So one way to know when the trend has been exhausted, when market cannot make a fresh higher high. Two, by the time markets now gone out of the trend line and market started to showing change of structure, turning to lower low, lower high, lower low, lower high. So this is how to identify the trend. So this is high, low, low, high, low. So now you now support your bearish trend with what? With ascending trend line by connecting your high. So if you connect your high, so it will now serve as a trending resistance. Trending resistance for the market. Why this? Excuse me. So why this is what? Trending support. So after identifying the overall trend, and we said what makes overall trend or major trend is simply that trend that you identify from monthly down to daily are major trends. So anything you are doing in the market for monthly time frame down to daily are considered as major trends. But monthly is the overall major, while weekly is like mid trend, while daily is like okay, short-term major trend. So any trend you now identify from 4 hours down to 15 minutes is considered as what? Minor trends. But to be able to identify market structure, the overall trend, the best way to do it is to go to monthly time frame. So when you understand, you identify the trend. So what next do you want to do? What's the second process? What do you say? I can't tell you. What's the second process after identifying your trend? Okay, you identify and plotting of what? I will not write it in full. If you don't know this, you are going to pay me $20. Great. Okay, you guys are owing me $30. Okay, you are owing me $10. Shego is owing me 30. Thank God I remember. So Emmanuel, you collect. So after identifying the overall trend, so the next thing you want to do is identify this as our support, 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 resistance, 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 support, resistance, support. So like that. Then the next thing is you plot your key levels by following. So we said the best way is to plot your key level is to travel to the history. So if you are in front of your chart, so you can travel depending on your strategy. So you can travel as high as 10 years, 20 years, 30 years, 50 years, depending on what your strategy is all about. So now, after doing that, so you will now plot your key levels. From here, market made a fresh high. So from here, market made a fresh